they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG. Try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What are you, nuts? 85% of the people do not know how to get out of the market. They lose money because they don't know when to get out. I'm Phil Grandy, philsgang.com. I solved that with my Pro 2 color-coded chart. It tells you when to get out. It tells you when to get in, tells you what to add, not to add. Specifically, when do I get out? It tells you that. Check it out. Go to my site, philsgang.com. Get your 10-day free trial of my Pro 2 color-coded chart and a membership.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grandy and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264.
Thinking about investing in the stock market? Go to philsgang.com, where we have over 50 years experience in trading and investing in the stock market. Phil's Gang teaches you how to make profits in the market with stock chart analysis, up-to-the-minute alerts, and always keeping you informed with professional guidance in long and short-term positions. Go to philsgang.com or call one of our professional staff to answer your questions. 877-600-GANG. That's 877-600-4264. Stop wondering about your financial future and start doing something about it.
Hi, I'm Phil Grandy, philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down. It keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. That's what it's doing. The economy's going straight down. You know, banks right now are the worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days. Hi, I'm Phil Grandy, philsgang.com. Are you tired of being lied to about some magical economic recovery that only benefits the 1%? And then when the market does collapse, you're sitting there calling your broker, what do I do? When you should be shorting? Learn how to short the market. Continue to listen to my radio show, philsgang.com. Become a member, only $39.95 a month, and learn how to short.
Don't wait. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264.
When the market's open, we watch the market all day long. And when we see there's an opportunity for a stock, and it's a stock that we've been following, there's a lot of stocks we put on our watch list, and it has to hit a certain criteria. Then when it does, we alert you. You immediately get an alert that says, we bought this stock, X stock, at $30. So you get an alert immediately. What's better than that? I mean, nobody does that for you. But the most important thing, they'll say, okay, here's why we're getting out now, or here's why we're taking profits. I think it's going to go down. Look, the most important thing is this. I want you to be prepared for when the market does tank or rally, that you're with us, Phil's Gang. 877-600-GANG. Join my gang right now, Phil's Gang. 877-600-GANG, and you'll be in position, and you'll sleep at night, and you don't have to worry.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grandy.
About Facebook and Reels, I continue to believe in my contacts at Facebook that Reels is going to blow everybody away, and that this stock, which my travel trust owns, by the third quarter is going to put up great numbers, and people who are selling it now are going to be very wrong.
First of all, he's wrong. He's wrong. First of all, Facebook, it's already been sold. It's already been sold off. The people who are in Facebook, the reason why they're selling it now, they didn't get out when they should have gotten out. 80% of the people who are in the stock market don't know when to get. They lose money because they don't know when to get out. That's a fact. That is a fact. 80% of people who buy stocks and the stocks are going up, they do not know when to get out. They have no clue. Who do they depend on? They depend on the information they're getting from characters like him, from the fake business network, and their brokers. Now remember, you're a broker, you become broker working with brokers. None of them are there to help you. They're there to help themselves. Do you really believe the brokers really are there to help you? They're there to make a living. They want to make as much money as they can. Of course they want to build their book. Of course they want to have a relationship. But the people behind the brokers, I shouldn't be picking on the individual brokers, the company behind the brokers, what I'm talking about, take J.P. Morgan, take any of the big Merrill Lynch, any of the big brokerage houses. The brokers are told what to do every morning. They're told what to do. Everything's priced for them, told what to do. It's the companies. It's the Jamie Dimon. You think Jamie Dimon cares about you? In fact, Jamie Dimon only cares about his brokers. My point is that everything is driven behind the scenes. And what I want to talk about today is like what he's talking about there. He's saying Facebook. Well, wait a minute. If you go back and take a look at Facebook, you knew when to get out of Facebook. If you go back to, let's go back to the crash of 2020, February 2020. In January, they sent everybody home. Remember? Pandemic. January 2020. Everybody runs home. Leave your job. Go home. Hide in the cellar. And we'll send you checks. We'll send you all kinds of checks. Don't worry. We're going to send you the CARES Act. We're going to send you the American Rescue Plan, the American Family Plan. We're going to send you everything. We're going to send you checks for your kid. We can send you $7-8 trillion for your kid child tax credit. Oh, you're behind on your mortgage. We'll send you money for your mortgage. You're behind on your rent. We'll send you money for rent. Behind anything, we'll send it to you. Don't worry about it. Just take your money, put it in savings. Don't worry about it. I mean, this is what was going on. This is crazy. So, Facebook, when that happened, remember, we had that 31% crash in the market. And why did we have that 31% crash in the market? Because yields were too high. Yields were too high. See, what people don't understand, what drives the stock market and the bond market and drives our economy, and the biggest part of our economy is housing, is what's called yields. That's what I'm talking about, working the back room. It's all about yields. Everything is rigged through yield price. Everything's rigged through yield price. So when yields reached 190 points on January 2020, the housing market was ready to crash. Even if there was no pandemic, we would have had that correction of 31%. Because at 1.9%, the yield, take the 10-year Treasury yield, that was a mortgage rate. They had to charge you a mortgage rate of 4.09%. So they're charging you 4%. And what happened is, when he sent everybody home and small businesses were going out, and all the jobs are, 70% of our jobs come from small business. Everybody had to close their restaurant, bar, and everything else. And people were paying 4% rates on their mortgage. Who's going to buy a house? Nobody's going to buy a house at a mortgage rate of 4%. Too expensive. The yields are too high. So how do they get to that 4%? How's that yield determine that 4%? And I'm going to explain that, because housing is everything in this country. Do you know that housing, we have about 411 million single-family homes. This whole country of ours have been driven by building homes, getting somebody his home. It's all about housing. Housing has drove this country since Columbus got here. It's always been. A strong economy comes from economic growth. If you're going to have a strong expansion, strong economic growth, it all comes from one place, housing. 441 million single-family homes in this country. It's not counting the apartments. Because when you're going to build a house, commodities kick in. Copper and steel and bricks and everything else. And then when you build the house, people have the furniture and they have to go buy lawnmowers. It just drives everything. If you build a new house, they start your home. Every carpenter that shows up at the job, every one single person, whether it's a carpenter or a plumber or whatever, every person that shows up on a job, 3 other jobs are created in your community. So if a carpenter shows up, he's going to start framing. There's going to be another guy working to bakery, another guy working to dry cleaners, another guy working to car wash. Because every time you put one to work, it gives you 3 times that. It's an amazing concept. When everybody got back from World War II, remember Levittown? How do you think we had the booming? I mean, it was just the booming late 40s, early 50s, 60s, housing. Well, who the hell sets the prices on these housing? Well, it's called a yield. And when the house went up, house price went up. How they determine that, the house price, not the mortgage, when the house price went up? Well, it used to be up to Baby Bush wages. If a wages went increase that year 2%, the house price would be up 2 to 3% the most. The whole idea was to drive jobs, and then when you drive jobs, you drove productivity, because the jobs were creating all this production. And then when the company made money, the idea was to take that company, take that money, and roll it right back into the business. Business investors get new equipment, new machinery, new buildings, so that the guy could produce more, so he could pay him more. And when he paid him more, he went out and bought a house, and house prices went up because wages went up 3% that year. So you say, oh, house is up from 3% last year. Well, you go back and see why. Because the business, the company, took all their profits, throw it back into the company, so his workers could produce more with new equipment and machinery, and then he could pay him more because he's producing more. That's how housing prices went up. Everything was based on production. And it all started with the companies have to take their profits, plow it back into the business, called business investment. And from that business investment, productivity grows, wages grows, homes grow. That's how we had such an unbelievable economy after World War II. It's all based on that. I mean, it's a pretty simple system. Think about it. So the next thing is the person wants to know, how's my payments? What rate am I going to pay? Well, I'm going to go through that. And then I'm going to show you I'm going to show you, when we come back, how they knew in 2009 that housing would be up 100% and gasoline would be up over 112%.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
When the market's open, we watch the market all day long. And when we see there's an opportunity for a stock, and it's a stock that we've been following, there's a lot of stocks we put on our watch list, and it has to hit a certain criteria. Then when it does, we alert you. You immediately get an alert that says, we bought this stock, X stock, at $30. So you get an alert immediately. What's better than that? I mean, nobody does that for you. But the most important thing, they'll say, okay, here's why we're getting out now, or here's why we're taking profits. I think it's going to go down. Look, the most important thing is this. I want you to be prepared for when the market does tank or rally, that you're with us, Phil's Gang. 877-600-GANG. Join my gang right now, Phil's Gang. 877-600-GANG, and you'll be in position, and you'll sleep at night. You don't have to worry.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
Hi, I'm Phil Grandy. Is your business prepared to respond to any emergency in the workplace? Well, you better be. Let over 30 years of law enforcement experience go to work for you. Boyd Investigative Group is here for all your business security needs. I know. I use them. They're terrific. Call today for your free confidential consultation. 941-724-4535. That's 941-724-4535. Or visit them on the website, BoydInvestigativeGroup.com.
License number A1900020.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
Did you know breast cancer kills 113 people every day?
That's unacceptable.
African American women die from breast cancer nearly 41% more than Caucasian women.
That's unacceptable.
Breast cancer is the leading cause of all cancer deaths for Hispanic women.
Breast cancer is unacceptable.
Together with Susan G. Komen, we're committed to reducing U.S. breast cancer deaths by half.
and we're going to do it by 2026.
Visit Komen.org/unacceptable.
Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG. Try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. Housing is what's going to take this stock market down big. It's housing. Remember, it took it down in 2008, 2009? It's going to be worse this time. Worse this time. And I'm going to explain why. And this is why Powell's so afraid to sell the 10-year Treasury yields that he has on his balance sheet, $8 trillion worth, because yields will go up, and that's going to push house prices up again. Yields go up, house prices go up. Look, when you go and buy, when you go to buy a home, or you buy anything, everything's driven by the Fed or yields. The way it works and why I'm right about housing crashing is because the Federal Reserve, their job is to provide money to the banks for your auto loan, student loan, your auto loan, student loan, your small business loan, home improvement loan, all those sorts of things. Now, they control their own price. They control their own interest rate. They decide, the Federal Reserve decides how much they're going to charge. Let's use Wells Fargo. So the Federal Reserve is going to decide how much are they going to sell money to Wells Fargo. Then Wells Fargo can decide how much they're going to charge you for auto loans and for your business loan and personal loans. So let's take, normally the Fed rate, let's use 10%. It was 10%. Then they would sell the money to Wells Fargo and they sell it to you. Well, anytime they want to beef the economy up to help their banks sell more auto loans or more student loans and more everything, except for mortgage. They leave mortgages out of it. Mortgages have nothing to do with the Fed. So what the Fed would do is print money if they wanted to give Wells Fargo a better deal on the money they were selling Wells Fargo. So Wells Fargo could help them boost their auto sales or personal loan sales or business loans. Then what the Fed would do is just simply print money. Then they'd go and they could drive the cost of their money down by bringing down the cost of the 10-year Treasury. Like anybody else, you go buy a 10-year Treasury, the cost of that yield goes down. The cost of that yield goes down. So if the 10-year Treasury is let's say 200 basis points, 2%, and you go buy Treasuries, then the yield drops. So it drops down to 1.98 and so forth. Then more people buy Treasuries, it drops down again. And so now the Fed, he wants to help the banks, his banks. So the Fed will print money, that causes inflation, print money, and he'll go, and the Fed will buy Treasuries just like you do. It's at auction.
Now, why do they do that? They do that because if they buy the treasuries, the yield will go down further. So it'll go from 1.7, will go to 1.6. Now, that means that the Fed has cheaper money and will now sell the bank that money, and then the bank can loan you at a better rate, and then all of a sudden business picks up. So if you remember when we had the crash under Baby Bush, the housing crash, everything changed. $10 trillion was wiped out. He was scared. He had to get people back to work. And where do you go? Where do you go to build your economy? Housing. But the problem is the Fed doesn't control the mortgage rate. The only way they can get the mortgage rate down is by themselves printing money and going by those 10-year treasuries to drive those yields down, because the mortgage rate is tied to what that yield is. So whatever that 10-year treasury yield is, if it's 100 basis points, that determines what your 30-year fixed rate mortgage is going to be. So what they would do is just the Fed would go print money, buy a whole bunch of treasury, the yields would drop, and then they would turn around and say to the Wells Fargo, here, I'm going to give you, let's say the yields were 100 basis points. They were able, the Fed went in, bought a whole bunch of treasuries. The yield drops down to 85 basis points. Now, the Fed could loan to Wells Fargo, okay, let's say at 100 basis points, and then Wells Fargo to turn around and loan you on your 30-year mortgage 200 or whatever they wanted to do. So the idea is that the Fed, when Bush got into trouble, we had the crash, he decided to create a bubble. He would drive those down. He would drive yields down so that the Fed could turn around and sell money, okay, to the bank so cheaply. That's where all this cheap credit came in. So he turns around and he prints all this money to get the yields down. The yields go down now he could turn around and sell to Wells Fargo money above 0%. Think about what they did. They printed so much money, they could go and they could get that yield to come down so much that the Federal Reserve could say to Wells Fargo, I'm going to sell you money, okay, at 85 basis points, 100 basis points. Holy mackerel, no wonder the whole housing boom took off. But the backside of that is, well, we're printing all this money to get the treasury yields down from 200 all the way down to 85 basis points. Your gasoline keeps going up. Food goes up. Everything keeps going up. You got to remember that. That's where they don't tell you that. That's where the inflation. So while you think, while they're telling you we got this housing boom going on, we don't. Because everybody's buying houses, remember how they're buying cheap loans. Well, how'd they get there? By printing all this money, the Fed, to go buy treasuries, so then the Fed could take that money and loan it to Wells Fargo cheaply, and they could sell it to you cheaply. And we have this housing boom. But on the other end, all that printing to get to there is starting to kill you at some point. When I get back, I'll tell you about the model they had, that they knew exactly what you'd be paying for a car 10 years earlier.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
When the market's open, we watch the market all day long. And when we see there's an opportunity for a stock, and it's a stock that we've been following, there's a lot of stocks we put on our watch list, and it has to hit a certain criteria. Then when it does, we alert you. You immediately get an alert that says, we bought this stock, X stock, at $30. So you get an alert immediately. What's better than that? I mean, nobody does that for you. But the most important thing, they'll say, okay, here's why we're getting out now, or here's why we're taking profits. I think it's going
going to go down. Look, the most important thing is this. I want you to be prepared for when the market does tank or rally, that you're with us, Phil's Gang. 877-600-GANG. Join my gang right now, Phil's Gang. 877-600-GANG, and you'll be in position, and you'll sleep at night, and you don't have to worry.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG. Try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grandy, philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. That's what it's doing. The economy's going straight down. You know, banks right now, the worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grandy and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
Welcome back to Phil's Gang. I'm trying to explain. I'm doing it poorly. I'm trying to explain. Get confusing everybody. Trying to explain why the housing crash is here. And I'm going to get that done for you. But I also want you to know that every time, any rate you pay, we know there's two rates. We know there's the mortgage rate. That's set by what the 10-year Treasury yield is. The Fed sets the rate off that 10-year Treasury. What the Fed does, they set their own price on business loans, auto loans, student loans, any loan you can think of, except for mortgages. They set the price. So usually their interest is about 5% because they got to make money. After the market crashed, after 9/11, Bush wanted to get the economy going. So the first thing Fed does is they always have a rate about 5%, and then they would sell to the bank that money at, say, at 8%. So they instead turned around, and what Bush wanted to do is get rates down to zero. It's called QE. Then QE started where all they would do, the Fed, you print all this money, the Fed takes that money, and if the Fed can get the 10-year Treasury yield down, they can set their own rate down, which is a separate rate. So think of the Fed rates at 5%, always at 5%. And let's say home mortgage is always at 10% before the crash. After the crash, they wanted to get the economy going again. So they do QE. What's that mean? When they print all this money, the Fed prints money. Now, for the Fed to be able to lower rates to the bank to sell you a car, QE, the Fed will print the money and has to get that 10-year Treasury yield down so that the Fed can drop its rate down to lend money to the bank at a lower cost so you can buy a car at a lower cost. That's how the economy grows. But they went crazy. It was supposed to be only done for 1 year. So they printed gigantic piles of money, the Fed. They went to the auction, and then they could drive the 10-year yield down. Now that gave them room to move their 5% down to zero. Now you get me? That's what I was leaving out. So they get that 5% down to zero. Just think about all the Fed wants to do. Their cost of money has always been 5%. They could loan it to the banks, make plenty of money. The Fed could loan to you for your car. You're happy. Everybody's happy, and your economy's growing. And then on the other side, businesses kept throwing their money back into their businesses. New machinery, new equipment to keep productivity up, because you as a worker, you could produce more. Your wages go up. And then when your wages went up 2-3%, the house price went up 2-3%. How life was so simple before Bush, before baby Bush screwed everything up. So the crash comes. So the first thing, they said, let's get our Fed rates to zero. If I can get my Fed rates to zero, then I can loan to Wells Fargo at a 1/4 point. I'm paying nothing, and I can now, I'm the Fed, I'm going to loan it to Wells Fargo a 1/4 point, and then they can give you a personal loan at 2%. So they're making a difference between a 1/4 point and 2%. The bank's happy as hell, and the Fed's happy because the Fed's making, he's got the economy going. That's their job, get the economy going, keep prices stable, keep everybody at 100% employment. So that's what they first do, to go in and try to get the auto loans moving again, personal loans, business loans, try to get their 5% down as low as they can, and they got it down to zero. Do you know what it took to get that 5% rate they always charge down to zero so they could loan the money to Wells Fargo at a 1/4% instead of 6%? The printing of money was incredible. Because remember, all rates are based on the 10-year Treasury. Now they want to get the housing market moving. This is where the problem comes in. Now he wants to do the same thing with housing. So housing prices are always at 10%. Mortgage usually 10% back then, we'll say. So they went in and they started to print tremendous amount of money. And I'm talking about now both
Baby Bush, and then we went over to Obama. And they printed all that money, and they started to drive those interest rates down. Remember, the money's now down to zero, right? So now they could give money to Wells Fargo to give you a mortgage loan. So instead of you paying 10%, now you only had to pay a mortgage loan of, let's say, 2%. So if you go back now to 2020, when we got to 2020, our yields were at 1.9% on that 10-year Treasury. So that means the mortgage rate to you was 4%. When we had that crash, that 4% wasn't working anymore. People couldn't afford it because everybody went home. So now here in 2020, they print more money, and they could get that yield to go down on the 10-year Treasury by 85 basis points. Do you know how much printing of money is? And every time they do that, gasoline goes up, food goes up. Nobody knows it. Nobody realizes it. So now in March of 2020, if the yield was on a 10-year Treasury 85 basis point, they got the mortgage rate from January 2020, which was 4%, they now got down to 3.7% by dropping that yield from 1.9 to 85 basis points. Wow, that's a lot of money to go from a yield from 1.9 down to 85 basis points. So they could sell you a mortgage at 3.7% instead of 4%. Now, they wanted to get down even further. And it takes time to kick in when they do this. So by the time we hit August 2021, the yield that was 1.9, it was a 4% mortgage. That yield then went down to 85 basis points. Then they gave you a mortgage 3.7. Well, the mortgage rate the yields had to go up a little bit, but by August, at least they had the yields at 1.3 and the mortgage rates were at 2.8%. So they're always struggling, trying to keep these rates down really, really low. But it takes tremendous printing of money to buy treasuries to get that yield down. So the Fed can loan that money to Wells Fargo to loan you on a house. Also in October 2021, now we're getting in trouble. Mortgage rates are back up to 3%. Now the yield's at 1.7%. So now we've gone from you at 1.3 to a mortgage 2.8. Now you're up there with a yield of 1.7. See how they're starting to move up, print more money, and now the mortgage rate's 3%. Now here we are in March 2022. They're printing money again to try to get that yield down. Now the yield's down 2.3. But the mortgage rate's up to 4.6 again. Because the problem is, every time you print money to get these rates down, to have this big housing boom and have this big economy, but housing, it's always housing, it doesn't work because that inflation kills you. So now here we are, we got yields finally at 2.3% and our mortgage rates are going to 4.6. Why? Because yields keep going up. As the more money you print, at the end it turns on you. It turns against you. So at some point, what happens is the short-term money that the Fed always controls is starting to be the same cost as long-term money. So if you look, all you have to do, and you know you're going to crash it, we're so close. If the 10-year Treasury yield right now is at 2.36, the yield, the Fed money, the 2-year is at 2.13. Are you kidding? The 2-year should be at 1. Let's say the 2-year should be 1%, and the 10-year should be, let's say 3%. When you get the 2-year so close to the 10-year, that means banks are in trouble, big time, because they can't make money. That's where the yield squeezes. So all you have to do is, if you see the 10-year Treasury yields at, let's say, 2.36, and all of a sudden your 2-year should be at 1.13, but it's now at 2.13, the closer it gets to that 10-year Treasury, it indicates to you the housing market is over. More proof when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264.
Thinking about investing in the stock market? Go to philsgang.com, where we have over 50 years experience in trading and investing in the stock market. Phil's Gang teaches you how to make profits in the market with stock chart analysis, up-to-the-minute alerts, and always keeping you informed with professional guidance in long and short-term positions. Go to philsgang.com or call one of our professional staff to answer your questions. 877-600-GANG. That's 877-600-4264. Stop wondering about your financial future and start doing something about it.
When the market's open, we watch the market all day long. And when we see there's an opportunity for a stock, and it's a stock that we've been following, there's a lot of stocks we put on our watch list, and it has to hit a certain criteria. Then when it does, we alert you. You immediately get an alert that says, we bought this stock, X stock, at $30. So you get an alert immediately. What's better than that? I mean, nobody does that for you. But the most important thing, they'll say, okay, here's why we're getting out now, or here's why we're taking profits. I think it's going to go down. Look, the most important thing is this. I want you to be prepared for when the market does tank or rally, that you're with us, Phil's Gang. 877-600-GANG. Join my gang right now, Phil's Gang. 877-600-GANG, and you'll be in position, and you'll sleep at night, and you don't have to worry.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
Warning. Google, Apple, Microsoft, Netflix, Facebook, all these hot stocks are going to crash. They're going to drop as much as 60, 70%. Hi, I'm Phil Grandy, philsgang.com. Exactly what happened in the dot-com days is going to repeat itself. Remember, 85% of people lose money in the stock market because they don't know when to get out. I fixed that with my color code technology chart. It tells you when to buy, when to sell, when to add, and when to run like hell. That's right. Make sure you check it out. It's free for 10 days, philsgang.com. What, are you nuts? Coffee's up 92%. Lumber's up 67%. Heating oil, what, 60%? Gasoline, 55%. I understand why you guys are telling me to raise my rates here at Phil's Gang, but we haven't raised our rates since 2001. Hi, I'm Phil Grandy at philsgang.com. I'm not going to raise my rates. Our membership's been $39.95 since 2001, and for a good reason. So that you have enough room that when you do make money here at Phil's Gang, and you will, because you're going to learn how to short stocks, that there's enough room to send some money to St. Jude. That's why we never raised our price. And that's why we give you good value. So, you want to continue with good value, good information, be on the right side of the market? Join my gang, philsgang.com, where the price has not moved, where we fight inflation. philsgang.com. What, are you nuts? If the stock market can make you so rich, especially Apple and Microsoft and Google and Amazon and the rest, why are so many Americans poor? If the 401k promises you a retirement, then why is it we are in a retirement crisis? Here's the answer. Because 85% of you get out of the market too late. I fixed that with my color-coded chart, which tells you when to buy, when to sell, and when to get out. That's right, when to run like hell. Check it out. You get a free membership and the free color-coded chart for 10 days. Check it out, philsgang.com.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. So, just think of it this way here. The Fed, to accommodate Bush and to accommodate Obama, every time there's a crash, they decided, let's do it fast. Let's do a fast fix. We won't have a recession. We'll skip the recession. And we'll build the economy by dropping rates.
it doesn't work. It catches up to you because you got to print so much money to drive those rates down. The snake turns and comes back at you. And where can you find if it's turning coming back at me? We're going to have a crash. Well, it's simple. It's here. If you had a 10-year treasury, go look at a 10-year treasury yield, and let's say a 10-year treasury yield is at 2%. You want to always make sure the 2-year treasury yield is at 1%, about half of it. You got a nice, strong economy. Because that means that the Federal Reserve can sell money to the banks for business loans, car loans, auto loans, personal loans, and make just enough money, and the bank makes enough money, and you're getting a fair deal. As long as the 2 years at 1%, now I'm just making these numbers up and trying to show you the spread, and as long as the 10-year stays at 2%, they have that spread between 1 and 2. But when the crashes came, both for at the end there for after 9/11 for baby Bush, and then of course Obama came in, they didn't want to create jobs. Worst thing came in was when Obama came in. That was the worst thing happened because he didn't want to create jobs. He wanted to create a social society. He wanted bigger welfare. You go back and create, when you have a bad economy, you screw things up. The way you go back and fix it is start with a recession, number one, to get rid of all the debt, get rid of all the bad loans on your book, get rid of everything. Just get it down, clean everything out, take that hit. And then you don't have to print money where these yields go up that finally bite you. So all these years now, take for example, if you go and take a look at gasoline, if you go take a look at regular gasoline in 2009, it was $2. They knew from their model, if they keep doing this, keep printing money to get that 10-year treasury yield down so the Fed could sell money to Wells Fargo and the other banks cheap, and they could sell you a cheap loan. They knew in 2009, the cost of that gasoline, they knew in 2013 on their model was going to be up 75%. They knew that already. They knew in 2009, by 2022, gasoline would be up 112%. They knew that in 2009 on their models because they knew that all they're trying to do is get people back to work and make themselves look good. People are upside down in their homes, right? Remember, people owed more in their mortgages than the house were worth. They wanted to look like heroes, and they fixed that. And they want to do it quick. That's the wrong way. Go into recession. Everybody has to take their hit. Hey, if you owe more in your house than you should, you've got to go into foreclosure. You have a bank loan and you can't pay it, you got to go into foreclosure. That's how it used to be from the day Columbus hit the shores up to 2008, 2009, when they wanted that quick fix. Used cars in 2009 were 15 grand. They knew in 2013 be up 8% to 16 grand, but they knew in 2022 it'd be up 100% in 30,000. So my point to you, they knew in 2009 they'd be selling you gasoline 112% higher than in 2009. They knew in 2009, by 2022, that used car prices would be up 100%. They knew that in 2009. They knew your home price in 2009, okay, would be at 185 grand. They know your house price in 2013 would be up by 4%, but they knew your house in 2022 would be up 94%. So understand this. Everybody in charge at the Fed, our presidents, knew in 2009 that car that you bought for 15 grand is going to be up 100% by 2022. They knew in 2009 that house you bought for 185 grand was going to be up 94% in 2022. Biden comes to office. Instead of going into a recession, he decides send everybody home, and I'm going to do all these social programs, the CARES, the American Rescue Plan, Family Plan, all that, all this money. How are they going to do that? They got to get the rates down. So you end up printing up so much money, which you got to watch, because the housing market's the first thing to take you down. And also the tech stocks, they're going to take you down, because tech stocks can't survive on high yields. So all that money you print, we pay for it. That's what the cost of. You think you got a good deal on your car, okay, because the rates were low, but you're paying 94% more for your car,
in 2022 than you did in 2009. As long as your payment was low, you bought the car. Then people would start asking, what's my late payment? As long as my late payment, I can get my late, I'll buy the car. So from 2009, when you go up 112% in gasoline, they knew that. It was not a secret. It's not a secret. And they knew in 2009 you're going to pay 100% more for a house in 2022 than you do 2009. Because the whole thing is the more you print to try to put a quick fix in to get the Fed, who's always at 5%, that's what they sell money at, to get that down to zero so they can sell it to Wells Fargo for a quarter point, they got to print all this money. That's why your car is going up from 15,000, then it goes up then it goes up 8%, then it's up 100%. Every time they print money, they're just screwing you. Now we're at a real mess. You get to a point that they can't get those rates down anymore. They can't just go and say, okay, well, why don't we do this again? Why don't we just print more money? Go buy the yields again. Go buy Treasury, drive those yields down again. Well, if you got to print that kind of money to go buy Treasury to get those yields down again, your gasoline in your car is going to go to $10. That's why I said to you, this tech market is over. If you're buying tech stocks based on, if you got a 1 or 2 year horizon, buy Amazon now, buy Microsoft now. You're not going to be around 1 or 2 years. It's going to be so bad. No, it's not going to work that way. The only thing we're buying, when we buy Microsoft and a tech stock, we know what we're doing. We're buying it 1 day, 2 days, 4 days, 6 days, 7 days, maybe the most. You can't buy as an investment because it's not an investment anymore because they can't do anything to drive rates down. And you can't be selling Treasury. I mean, you can't be selling tech stocks when you got yields at 240 basis points. Tech stocks can only remain high. The price of a stock remain high if it's at around, under, let's say under 100 basis point. Under 125 basis point, you can buy a tech stock. You can't buy tech stocks at 240 basis point. And when they tell you to buy in a dip, that's what they're doing. It's called putting in a floor. They're creating an illusion. They're trying to get you they're getting you to stop the crash temporarily so they could get their big clients out. That's what they did back in 2000, the dot-com crash and the housing crash. That's what they're doing. That's called putting a floor in and creating an illusion. Oh, the crash is over. So the bottom line is, anytime that you want to know if you're in real deep trouble and the housing market's going to crash, go look at your 10-year. If your 10-year Treasury yield was once, let's say, 2%, and the 2-year, you can look it up right now. Say it was 1%. I'm just throwing those numbers, and you had the spread between 1 and 2. But now you go look, and your 10-year Treasury's at 2%. But now your 10-year's at 2. But now all of a sudden your 2-year is at 9. You're almost together. It's over. When it does that, it means it's done. That means your tech stocks can't go any higher. Never buy these tech stocks anymore as inflation until we get a crash. Buy them for short term. Housing stocks, we're ready to short the hell out of those. Those are going to crash. You wait and see. This market is going to go from where it is now all the way back down to where we started in 2000 and March of 2020. We'll probably go down about another 30% from where we are now, because no longer can they print this money, the Fed, to drive yields down so that tech stocks will keep going up. No more can they print money to drive mortgage rates down so you'll buy a house. If they do that, then your gasoline is going to go up again. You're going to go from gasoline's going to go from $2 2009 to 112% now, and you're going to go up another 100%. That's how this works, and that's why you're going to see the market crash. The housing market will lead us down again, and the techs. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.